Hi there, this is Tintin. Today we're talking about how the stock market will react in March of 2021. While there's a slight sell-off in the later part of February, I still feel that there will be more sell-off in the stock market. So in this video, we'll be talking about the reasons why I feel that we're heading towards another sell-off in the stock market in March of 2021. Before we continue, please smash the like button, and if you'd like to see more such videos, please subscribe to this channel. Firstly, we will be talking about the reasons why the stock market could climb so high despite the pandemic. The first reason is that the Fed Chairman Jerome Powell has become the stock market's best friend. When the economy is recovering from the pandemic, he pointed out that he will continue to hold interest rate at near zero for a long period of time. This greatly boosted growth stocks as they could borrow money without having to pay high interest. On top of that, this led to many bond players to leave the market and enter the equity. Due to this influx of capital into the market, this greatly benefits the stock market. Hence, this led to a rebound in the stock market in late April. The second reason is that these growth companies started to build expectation and show that they could still grow despite the business environment. Even though this expectation has been lowered due to the pandemic, it is shocking to see more companies beating estimates. Take for example Tesla. Previously, Tesla struggled to turn positive. However, in 2020, Tesla managed to make a full year profit, which is amazing. No wonder the company is being allowed into the S&P. As more investors realize the power of Tesla, more money is being pumped into the stock, which caused the stock price to increase. Sooner or later, Tesla has a huge position in the S&P 500, and any small move in the stock could move the stock market. The third reason is that there's an influx of retail investors entering the market. In late March, many retail investors started to enter the market, and they spend a lot of time at home. They have a lot of time to monitor the market. When the stock market recovers, these retail investors make a fortune trading and felt that they could beat the stock market. As the arrogance continued to grow, this greatly benefited the stock market. However, due to the rise in the stock market, these investors caused the stock market to be like another gambling market. Secondly, we'll be talking about the reasons why the stock market recently has a slight sell-off. The first reason why the stock market recently has a slight correction is due to a rise in the bond market. As the bond market moves oppositely from the stock market, whenever bond yield increase, the stock market will come down. Furthermore, many bond players are currently in equity. This is due to the effects of the pandemic, which forced many players to move into the equity market. The second reason why the stock market recently has a slight correction is due to investors taking profit off the table in the growth stocks and moving into the reopening trade. Previously, the stock market rebound is due to many of these technology stocks, which has been seen massive adoption in their service. On top of that, the pandemic has brought forward some digital trends which benefit these companies. Hence, the results started to beat analyst expectation. Investors cheer as there are companies that could perform well during this pandemic. However, when multiple vaccines enter the market, investors are extremely hopeful that these reopening stocks could benefit and go past this pandemic. Hence, many investors move their capital away from the growth names and into these reopening stocks. Given that these technology companies hold a significant portion of the market, this move caused the stock market to decline. And this move is due to investors readjusting their portfolio to the current market. The third reason is that we'll be talking about is the current dispute whether New York governor could do more to prevent the spread of the virus. Mr. Cuomo, who has been governor for more than a decade, is under scrutiny from his own party for allegedly hiding the true number of deaths in New York care homes. Due to these claims Americans do not know how bad the pandemic has been for the state. So, how does this affect the stock market? Pretty much, if you feel that there is still hope that there are a few states that have seen a spike, then this will be bad news for the market. However, if you believe that most governors know how to beat the virus, then this will be great. Depending on how you interpret this fact, this will either cause the market to go higher or lower. Finally, we're talking about how the stock market will react in March of 2021. I strongly feel that we have just reached the tipping point in the stock market. If these growth names could prove to investors that could grow at a faster rate compared to their value peers, this correction will be a good chance for some investors who have not bought any growth names to pile into them. However, if the current and future growth rate finally caught up to these companies, we'll be heading towards a massive sell-off. Given that the Federal Reserve has used most of its tools to save the economy during this pandemic, there ain't a lot of tools that it can use. On top of that, many reports said that this could be the worst crisis ever in history. In conclusion, we're heading in towards a troubled March season. While there are signs that the stock market could continue to march higher, there are also signs that we are heading towards the end of this great bull market. Depending on how the US federal government responds to this imminent crisis, there could be a huge sell-off in the stock market. With that, thank you, have a nice day. Goodbye.